Good morning and welcome to the Killik & Co market update. Mario Draghi now has less than 2 months left as the president of the European Central Bank, and it feels as though he's using his final weeks to impose further monetary policy easing. In a meeting with the bank yesterday, it was announced that the interest rate in Europe will be dropped from minus 0.4% to minus 0.5%. The bank also announced it would be restarting its quantitative easing program, and it will start to buy a further 20 billion euros worth of bonds per month. So that should have the effect of lowering bond yields across Europe. So the combination of lower interest rates and lower bond yields should have the effect of weakening the euro, and that hopefully should have the effect of boosting the European export sector, which has been very weak indeed in recent months. So that seemingly is the plan of the European Central Bank, boosting the export sector in order to generate some degree of inflation across Europe. However, Trump, on the other side of the pond, is less than happy with these plans. He believes Europe has been manipulating its currency for far too long, and that the weakness of the euro has disadvantaged the US export sector. So here's a tweet that was published by Donald Trump yesterday. He's not happy that the European Central Bank has been weakening their currency. Now, clearly Trump has been criticising the Chinese in recent years for weakening their currency. He believes that has disadvantaged the US, and he has imposed tariffs on China. You cannot rule out that further down the line, the US could end up imposing tariffs on Europe, and that is something that Donald Trump has previously mentioned. And also this week, the Hong Kong Stock Exchange has announced a surprise bid for the London Stock Exchange. Now, over the last 15 years, there have been a number of attempts to bid for the London Stock Exchange. Going back to 2004, the Deutsche Börse tried to bid for it. Then in 2006, the Nasdaq tried to bid for the London Stock Exchange. Then we had a failed merger in 2011 with the Toronto Stock Exchange. And then in 2017, there was a failed merger with the Deutsche Börse. So clearly the London Stock Exchange is a very desirable asset indeed. And perhaps that's part of the reason why the share price has gone from less than £5 back in 2005 all the way up to more than £70 today. Now, the LSE had been attempting to buy a big data company called Refinitiv. They had bid £28 billion for that company, and that bid is going through at the moment. So it feels as though the Hong Kong Stock Exchange has come out with their own bid for the London Stock Exchange in a hope that they can get that through before the Refinitiv deal completes. Now, clearly, the Hong Kong Stock Exchange owning the London Stock Exchange does present a huge amount of political and regulatory concerns, not least the fact that there could potentially be ties between the Hong Kong Stock Exchange and Beijing. So at the moment, the feeling in the market is that this deal is unlikely to go through. The Hong Kong Stock Exchange had bid £83 per share for the London Stock Exchange. At the moment, London Stock Exchange shares are trading at £73. So that big gap between the bid price and the actual price show you that market participants do not expect this deal to go through. And finally this week, Apple has launched its new iPhone, and it's the first time that an iPhone has been launched without a significant hike in prices. And what's more, Apple has launched new versions of some older models of its phones at significantly lower price points. So this shows you that Apple perhaps here is really trying to increase its market share. If you have a look at this chart here, you can see that over the past couple of years, Apple has been losing market share to companies like Huawei and also Samsung. We also know that in the future, Apple will be trying to make more money from its ecosystem, for example, by selling products such as Apple TV and Apple Music. And for that to be successful, Apple needs as many people as possible to be within the Apple ecosystem and to own an iPhone. So with that in mind, it's perhaps not surprising that they have chosen not to hike the prices for this latest version of the iPhone. Now, taking a look at the week ahead, again, it's fairly quiet in terms of companies reporting, and yet again, we will just be looking out for latest updates on this Brexit saga. That's it from us. Have a great weekend, and we'll see you next Friday.